Hey there friends, welcome back to episode 33 of that live portfolio update where we're growing 50k into $1 million. Now it's been pretty choppy the last fortnight and I hope you guys have kept your heads above water and you're about to find out how our portfolio went. Now before we jump into it, I've got some books behind me. I've put a link to every single book in the show notes below. The Amazon affiliate links, so every time you click it and you enter the website and you buy one of those books, it's actually going to give us a little bit of money for this channel, and that would be great. So if you're looking for something to read, please hit them up. Now let's do a big jump into it. Ready, set, go! Alright, starting with the sells. And trust me, it was more busy than a Bunnings sausage line. We moved out of half of the portfolio this fortnight, selling 7 of the 12 stocks, being Bendigo, Grange, Ive Group, Michael Hill, QBE Insurance, Reggie's Healthcare, and last episode's nugget, Yancoal. We ended up 9.5% down after dividends, but we'll discuss this in more detail later on in the episode. So what have we bought with our cash? Unfortunately, nothing. We have not found anything to buy since we had the sell-off. Hopefully next week the market starts to turn around so we can get back in. But while we're here, a quick reminder on the rules. The stock must be trading higher than last month's close. The stock must be above both the 3-point buy and sell trend line, and the underlying commodity should be trending above last month's close. This is the rules we need to follow to get back into the market. So when everything's going down, it makes it a little bit tricky to be entering into the stocks. But next week is a different story. Hopefully it turns back around. All right, benchmark time. So how did STW fare this fortnight in comparison to our portfolio? Wow, I have never seen it this bad, but it's also still pretty exciting on the other hand. We were 14.2% down compared to STW, which was 10.5%. We were closely tracking the downtrend until the market opened on Tuesday after the long weekend and the big sell-off happened. So many other factors at play here with the interest rate hikes, China playing funny buggers with iron, the mass exits in the ETFs, and the list just goes on. Nonetheless, we have rules to follow, so it's just business as usual. So now here's the list broken down. Well, as you know, we're down that 14.27%. It's pretty red, so there's no stars this week, but holy moly, we had some wipeouts. Champion down 23%, and another 8 were down over 10%. It's absolute madness to say the least. You can see the soldiers that we lost clearly with those zero values, but let's check them all out. So here's all last week's buys, holds, and sells. The ones that changed are as follows and why. So Bendigo moved from buy to sell as it breached the sell line at $9.31. Beach moved from buy to hold as it closed below last month's close of $1.73. Challenger moved from buy to hold as it closed below last month's price of $7.23. Champion moved from buy to hold as it closed below last month's price of $7.60. Cog moved from hold to sell as it has breached the sell line at $1.63. Lucky I am scripting this now as I have totally missed this one on my radar. We'll sell this one on Monday. Guru has moved from buy to hold as it closed below last month's close of $1.65. And our old friend Michael, he moved from buy to hold as it closed below last month's close of $1.02. And QBE moved from buy to sell as it breached the sell line at $12.14. This one didn't last long. And Reggie moved from buy to sell as it breached the sell line at $1.98. Also another one that didn't last long. Wow, would you have a look at that? The market turned so fast that 1/3 of the portfolio all hit 3-point sell lines. In the nugget, we can see if they kept going when we got out or if they started to recover. Nonetheless, this shows you how fast the market can turn sour. But please remember guys, these are not recommendations, just what I own and the rules that I follow. So please do your own research and don't forget to feed your chickens. Alright, so since inception, we have a pure capital gain of negative 17.12%. It looks like I'm chasing the wrong 20%. Portfolio now has a dividend return of 4.93%. This gives us a total return of negative 12.79%. From black last fortnight to our worst result. Wowzers. Haha, last episode I was only worried about Yancoal. But then this episode, we have gone from 12 to 5 stocks with one more to go on the open Monday. Challenger is real close to a 3-point trend line sell as well. So I've got to keep my eye on that one next week. Some more useless trivia for you. Our highest return was on the 23rd of the 4th at 8.19% to a record low less than 2 months later at a negative 12.79%. This is why people always say that you need to be fully invested if you can, as the market rebounds just as fast as it drops. As Howard Marks explains, the market is like a pendulum and it swings from one extreme to the next extreme real fast, so you don't want to be caught missing out. Alright guys, in today's nugget section, we'll be reviewing our lost soldiers so we can see clearly where we got in and why we had to get out. I'll also have a crack at doing this live with the mouse pointer, so wish me luck. So we'll start with Big Ben. So you can see here that we got in here on the blue line on the 29th of the 3rd at $10.22. The stock went sideways for a bit, it breached where our buy was, but it recovered and then it just fell off a cliff. Now as you probably remember, the stock market wasn't open on the Monday due to a public holiday, so when it did open, it just crashed straight through our 3-point trend line sell and our real one sell, and we got out at $8.96 and it's just kept going. Now it's at $8.68. So sometimes the rules work when we do get out. Now let's move on to the next one. Alright, next up we got our old frenemy, Grrr. Do you remember back in the day, on the 12th of the 1st, we got in here and we had to sell due to a real one sell. Then it had an awesome leg up and it just kept going and we were sitting on the sidelines. Well, we got back in on the 23rd of the 5th and it actually didn't do too bad. It went sideways, it went up, but then with the market crash and the iron, with everything with China and that, we got out on our real one at a sell of $1.38. It did recover and it's sitting at $1.42 now, but it did breach during intraday. But oh well, we'll see if we have another chance another time. Next up, we got one of our oldest stocks. So IVE Group, we bought pretty much when we started the portfolio back on the 13th of the 9th at $1.70 each. We actually probably should have got real one, but I was still learning the process. But nonetheless, it recovered, went sideways for a bit, had an awesome leg up, announced a couple of dividends, got a bit of money in the bank, but then it's just been tapering off. And then along came the sell-off and we got real one out at $1.45 and had to sell on Friday. This one I was a bit sad about, but rules are rules and we'll see how it plays out. And then our old mate Michael. Now, I had a lot of fun with this stock and I researched a lot into it, so I did learn a bit. So we bought in here on the 5th of the 11th at $1.05 each. Then it went straight up and I was so happy. Then it went sideways for a bit, then a massive leg up again. And then ever since then, over the last 5 months or so, since December, it's just been tapering off like a falling knife. And unfortunately, we were real one on the 14th of the 6th at 90 cents a share. It has recovered slightly and it's now sitting at 96, but oh well, the taper off tells the story in itself, and I'm kind of glad to be out. Then we have QBE Insurance. Now this guy wasn't in the portfolio for long. So we bought in at 11 for the 5th, it went up, and then it started tapering off, and then hit the 3-point trend line sell at $12.14. But when the market opened because of the public holiday, it went all the way down here, and this is where we got out at $11.50. It almost even hit our real one at $11.30. But oh well, it happens. Alright, 2 more to go. Now this is Reggie's Healthcare. This one was cruel to us. So we bought in here on the 13th of the 5th at $2.21. Had that instant leg up. We're like, yeah, we're winning. Went sideways for a bit and then with the sell-off, crashed. So our real one was at $1.99 and unfortunately we got out lower than the stock's trading now at $1.90 on the 15th of the 6th. Alright, last but not least, we got our last episode's nugget, which is Yancoal. So we bought in up here on the 18th of the 5th, and if you can remember, had all those announcements and we survived it. So it didn't actually hit our real one, had that awesome leg up, and then out came the sell-off and it breached our real one, and we sold on the 17th of the 6th, which was the Friday, at $5.30. It's currently trading slightly under, but we'll see what it does next week. But unfortunately, we had to get out. Now, the whole point of this nugget is to show that it's important to review your portfolio and why you've done these things. For better or worse, you should always keep trying to learn. I feel like maybe I should have pulled the trigger a little earlier on a couple of these decisions, but all in all, I'm happy with the timing. One thing to note is my sell points were actually a bit closer to the targets as they take into account brokerage costs, which is a couple of percent in themselves at times. Now the most important part is trying to enter back into the market over the next fortnight. Stay tuned, but let's keep moving on. Alright, so we're in a lot of cash at the moment. We're at $43,806. So with our $43,806 in cash plus our $33,414 in stocks, takes us to an overall value of $77,220, which is about a negative, I don't even want to press it, 13.72% total portfolio gain from last week. Wow, that's a big one. But at least we don't have any margin loans, right? Well, I hope you got through your beer and enjoyed that episode. Tune in next episode for more not financial advice, and you all know the saying, keep healthy and wealthy. See you guys.